Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his Thursday expert, Mr. Jonathan Twomley. How you doing, sir?
I'm doing great, Michael. How are you?
I'm doing well. So I don't know if it's happening in the commercial sector. I'm sure it is, but they're starting to talk about, kind of 2021 wrap up, right? This is what happened. Here are the stats. I thought we would talk about what happened in both our markets. I'm definitely more residential. You're definitely more commercial. You know what? I think I'll start with value. So the year kind of round up with values up 15.8%. These are national numbers, right? Very big. So again, go research your market. But Jonathan, when you look at, the apartment market, is it fair to say that apartments are worth more at the end of 21 than the beginning?
Oh yeah. I mean, we're way past the previous peak from right before coronavirus hit. Apartments took a 10% or so kind of value hit because of coronavirus before the Fed pumped all the money into the system. We're now way past that. So I think we were up at least 10% for the year, if not more.
Wow.
So yeah, it was a big year if you owned assets. If you had them already, it was a great year. If you didn't and you were trying to buy them, it's tough because prices are just getting exorbitant. But I am seeing on a regular basis people selling property for prices that are just eye-watering, and the terms that are eye-watering, right? I mean, an acquaintance of mine posted on Facebook that they bought a deal in 2017 for 12.7 million. They put $1.5 million into it.
Okay.
So they're all in for, what is that?
14.2.
14.2, and I think they sold it for 28 after 4 years. They closed at the end of the year, at the beginning of this year. I mean, that's just crazy, if you ask me, right?
No, yeah, that was not their plan going in. I'm guessing that wasn't
not their plan going in at all. So they made 70% annualized returns.
Wow.
Which is just, awesome, right? I mean, this is spectacular, but it just shows you, nobody predicts that kind of return, right? You'd be silly to do so.
That would be hard to replicate, I would think.
Yeah.
So the next thing I saw, again, kind of wrapping up the year, and it'd be interesting to see what's going on in your areas, is inventory. One thing we've suffered in residential is the lack of inventory. A lot of people aren't selling, they're staying put. This started when the pandemic happened. It made sense, but it really hasn't let up. We ended the year, again, this was by realtor.com, with 910,000 single family homes for sale. That is 70-80% of where it should be. And I'm curious what's going on in your world. Just is inventory finally coming back, or is it nothing to be found? You can only buy off market, or what's going on?
Well, I mean, here's the thing. There hasn't really been a lack of inventory. I mean, there's been a lot of sales.
Okay.
To the extent that people are not putting property on the market, it's because they don't know what to do with the money if they want to.
Yeah, exactly.
Right?
Yeah.
But there's always a lot of, for a lot of investor groups, they more or less have to sell after 5 years or so. And so there are people who just are sort of regularly exiting. They, for whatever reason, they can't do 1031s because of the way they're structured. So they don't worry about doing 1031. They're just going to pay the tax on the gains. And so you see a lot of stuff coming to market. You also see stuff coming to market where people are looking around and saying, my God, we're 1 or 2 years into this deal. We're beating our 5-year number if we sell now. We don't know what the future holds. It could go up more, but it could go down. So we're gonna just take our chips off the table now. So there's been plenty of inventory. I mean, I see, I'm on all the broker lists and I see deals every day getting marketed, and plus people doing off-market deals as well. So that really, I don't think has been an issue. I think, but to the extent that people want to do or have to do 1031s, that's difficult because it is difficult to find replacement deals.
Right.
That makes sense, right? So there are deals out there, tons of deals out there. It's very hard to find deals that make sense. People have been buying deals that don't make sense, and the market has been bailing them out, right? Which kind of creates its own momentum where people who are sort of less stringent about underwriting basically start to believe that this is a no-lose situation, and they're willing to pay any amount of money to get their hands on deals because they think it's just going to continue to go up. That's, that makes me frightened. I can't do that myself, but there are lots of people who do. So the market continues to just churn.
Yeah. And then the last statistics I got on the residential side, even though there's a dearth of inventory, again, 910,000, down 14.2% from last December. Total transaction was not a bad year, 6.12. I think 6.3 or 6.6 is kind of the record. So in the top 10%. Really what this means is that when inventory comes on, it gets sold really, really fast, right? Average day on market. Average day to get pending is 15 days, which is just nuts in single family.
Listen, I mean, you're seeing something similar in multifamily too. It used to be the case that, brokers would have a process where they would send you a kind of teaser saying this is going to be on the market soon. Then they would release it. They would say tour dates, a month from now, call for offers, a month after that, or 2 weeks after that, or whatever. Now, what you're seeing is basically like, maybe you get a teaser, maybe not. And oftentimes the first email you're getting is saying, call for offer in 10 days.
Wow.
So like, it's kind of like, if you want to see it, you better get down here now and see it like right away. And maybe you're not even going to see it before you bid on it. And like, call for offers in 10 days. That's it. Right. Yeah. So, and they're doing it because they can. And, the sellers too are now addicted to very fast closes, and people putting down enormous amounts of unrefundable deposits. I mean, I've been hearing crazy stories, $1 million unrefundable deposits. Just insane things like that because people are so desperate for deals. So, that's So that's actually right where I was going to wrap up. Is 2021 was the lot. Again, a fair amount of deals done, 6.12, pretty close to a peak. Prices up 15.8%. Inventory down. It just is an environment for people overpaying, getting buyer's remorse, doing bad deals that they may pay for later. I think there's a lot of stuff being done in residential. Certainly at the end of the year and probably the beginning of this year. I'm very concerned for first-time home buyers because rates jumped 0.5 point in 3 weeks. Investor loans are now over 4%, which we haven't seen in a while. So I think there's a lot of first-time buyers coming off the sidelines that are going to overpay in this environment. Makes me kind of concerned. So I think a lot of bad deals were done at the end of the year. Yeah, who knows? Could be.
Yeah.
Right. I mean,
of course.
I know that there are probably a lot of people who overpaid for deals at the end of the year in multifamily too, wanting to, for tax reasons, close out by the end of the year, stuff like that. But yeah, I mean, look, this is where we are, and it'll continue as long as the market keeps bailing people out. Right.
Exactly. See episode 1.
Exactly. So how long that will last, I don't know. But if interest rates go up, I think that'll throw a monkey wrench into the gears here. For sure.
Yeah, it's a question of speed for me. Is how fast, right? Because I think if Powell comes out quick, fast, and we're up a full point, say within 3 months, that's good. In my market, that's enough to slow transactions, and then we see where we go from there on values. But transactions will get hit a lot faster than values in my market. How about yours?
Well, yeah. I mean, if it goes up a point, right, that is really going to impact people's ability to. Well, let's put it this way. It is going to impact how banks underwrite loans because of the requirement that you exceed your loan payment by a certain amount of NOI, right? And for banks and for any sort of real financial institutions, that's 1.25x that you need to hit. But for private lenders, it can be less, but they still are going to require some sort of coverage, right? Usually something better than, they're not going to give you, in most cases, just one, but they're still going to have some cushion built in. And the higher interest rates go, the bigger the payment gets and the more it requires your NOI to exceed it. So that is going to, if interest rates go up that quickly, that will cause the market to seize up until like a new reality, new equilibrium is reached. But sellers, what's that? I mean, sellers, just to finish the thought, I mean, sellers will continue to have high pricing expectations. It's going to take a long time they're sticky on the way down, right? And
That's exactly what I was going to say.
Yeah.
The price elasticity on the way down is not great. It's going to be
Yeah.
very sticky, and that's why residential will freeze up. It could take 6 months for the seller to realize that it's not 2021 anymore.
Well, I saw this happen in 2010, 11, right?
Okay.
Where when I first got started in this, stuff was coming on the market and the sellers were still looking for peak pricing, right? And they were hoping that some dumb money was going to come along and pay them. And it took a year for sellers to start getting realistic and saying, all right, this is the new reality. I'm going to take what I can get.
Mhm.
Some people couldn't do it because they were underwater. They couldn't pay their loans back. That's why they were, asking for that high price, hoping that somebody was going to come and bail them out of their problem and save them from foreclosure. The people who had a lot of equity in their deals and not much loan basis, they were able to sell, but they had to reduce their expectations. And you'll see the same thing happen. I think what will happen is everybody will freeze up waiting to see where this goes.
Yeah.
Because like in the scenario that we talked about in the last session, I think the sellers will all be hoping that the Fed loses its nerve and reduces rates again, and then with the party is back on. The buyers, of course, will be concerned that the opposite is going to happen. So, it'll cause things to seize up for a while if rates go up that fast.
Yeah, and the last thing I'll say on I think it probably impacts your market a little more than mine, is if rates jump a point, right? 2 half-a-point moves, one in March, one in June. What happens when you kind of put the whole mortgage thing together is banks will act like that's going to happen again, right? And then, they usually want a profit spread of 1.5. They're now suddenly going to look for 2.5 because they think the Fed's going to go way higher. So it can get, again, the speed of his moves could really impact both our markets. So it's going to be a very interesting year for both of us to pay attention.
Yeah, let me ask you a question.
Sure.
If in your market, if interest rates go up, who is it going to impact more? Is it going to impact home buyers or investors? Like, who do you think is going to pull back? Is it the people who are making a financial calculation saying this is how much money I need to make, or is it going to be home buyers who are like, I just can't afford this additional?
That's a great question, because again, like 80 some odd % of deals are done by homeowners versus investors. I think investors peaked at 18.2% last year. I talked about on my daily financial news. So I think it's all about owners, and it's actually affordability. Affordability is the number I track, which is a combination of price, interest rate, and wages. Right? I think we are in a wage inflation cycle a la the 70s. So if wages, are going up 5-6% a year for multiple years, they can handle a different, higher interest rate.
Right.
But again, for me, it's speed. The market locks up. Q4 18 residential properties locked up because, the Fed was raising rates. He raised it again. The market didn't expect it. Then the banks raised rates. Residential stuff stopped. So for me, it's all about transactions. I think owner occs stopped. Investors are such a small part of it. They'll stop, but it won't move the needle, if that makes sense.
Right. Got it.
Yeah. So, Jonathan, how can people find you?
Well, there's numerous ways. If you watched the last one, there's a couple ways I gave you there. But another way, if you want to get on my email list, I have a free download called the Ultimate Guide to Buying Your First 100-Unit Plus Property with Other People's Money and Getting Paid to Do it.
Nice.
If you go to HTTPS, there's no www, say HTTPS / that stuff, multifamilylaunchpad.org just .org. That's all you got to do. You can get the download there and get on my email list. So I welcome you to go get that download. And if you'd like to invest with me, just Google my website, which is Two Bridges Asset Management LLC, and you can fill out the investor form on the page that you'll find there.
Very cool. Thanks, Jonathan.
Absolutely.